Okay, welcome to Life's Checkmark. Now is the time more than ever to check in. Don't let someone else check off your life. And that's what I'm going to be sharing with you today as far as handling with your money, your wealth. So now that I got everything figured out, let's see. I am going to bring up my screen here and share with you a presentation. How to protect and grow your wealth in any economy. And, start thinking about, like my mentor said, money flows all over, right? So think money as in water. So water, is in a stream, goes to a river, goes to the ocean, and it just keeps on cycling through again and again. So think of the money that you're putting into the bank. You're working, you're going to put your money in there, your paycheck, and they're going to give you, less than 1% of interest. But they're going to go ahead and lend that out to somebody else, charging them maybe 10, 12%. I don't know. I'm not sure what it is now, but, it could be less than that, depending on what you're going to get a loan for. So they're making a lot more money that way than you are earning anything. So now I am going to share a way to kind of play with that, and you become your own bank and have your own system working for you. So we're going to dive into this presentation I have for you. I'm going to leave it up here so you can see me as well. And give me 1 minute to get to it. Okay. All right. So a little bit about me. I am a husband, been married for about 15 years now. Lovely, beautiful wife of mine. I'm a father of two, son and a daughter, great kids. Now's a good time to get out there, play with them, and right now we're enjoying the snow and stuff. Real estate investor, buy and holds is what I focus on. And I'm a wealth strategist. So you're probably asking now, what is a wealth strategist? Well, what I do is I engineer a banking system for you to protect and grow your wealth in any economy, all outside of the stock market. And I'll share with you later how I have my own banking system, and I've had it for 4 years and how I've been using it. But to go a little bit further into how I became a wealth strategist, besides me having a banking system of my own, I was working for a employer for about 20 years, basically right out of high school. And back in May is when I lost my job. They decided of 2019, October of 2019, that they were going to close the doors. So production slowed down. The guys left. It was really hard. A lot of great people that were leaving there. And, I stayed till May just because of the simple fact that I was in the warehouse, and we, me and another guy basically were the last ones there to clear out the whole place. So it was really heartbreaking to see a lot of people slowly go out the door. And it was really, really hard to take on that, somebody could just say, we're done. We don't need you anymore. So that kind of, opened up my eyes a little bit. So when I was leaving there, I kind of thought really bad, I wonder where I'm going to go next. What's going to happen to me? But then, I looked at it as an opportunity more, and that's what it became. It became an opportunity now for me to be a wealth strategist. And now I can help as many people as I can in all 50 states. And, that's what I'm focusing on. So it's not like I'm working for a corporation that I can give it my all and maybe one day they'll close the door. So that's how I became a wealth strategist. The guy that helped me out with getting my banking system asked me if I wanted to come on and start teaching and creating stuff for others. And so here I am. I'm sharing this with you and see if it's something that you would like to learn about. So before we get started, you don't know what you don't know. All right. So you might think you already know everything, but you already don't. So just try to clear your mind for a little bit as we go in and look at this stuff further. Then ask yourself these questions. How is my current financial strategy working for me? And then could it be better? And what am I doing to change my strategy? How much control do I really have with my wealth? And then is my wealth safe? And these are some good questions you should be asking yourself, not just today. I mean, you should be asking maybe monthly, 6 months or whatever, and see if there's some kind of change that you can make to control your wealth better and, earn more money. So money storage. And just a quick note, that's a jar from my daughter's bedroom. She wanted to throw that up here and share it. So maybe some people keep it in jars. My kids started out there just so we can separate our money and try to have better money practices for them as kids. As they get older, they can carry those practices. So where do you save your money? Under the mattress. I know a lot of people are probably still doing this, even though a lot of people might frown upon it. Savings and checking account, CDs, certificate of deposit, and then the 401k. And they all sound pretty good, right? And we all think they're good because we are born and raised, and our parents are teaching us, and their parents are teaching them that this is what we do, right? And you're also going to get all these ads coming at you. The government and stuff is throwing all this stuff at you. The 401ks is the employers and stuff. And that's where it's all coming from. You're getting a whole bunch of information, and it just kind of leads you down into a funnel. So I want you to expand your mind a little bit here and know that there are other options out there. So let's ask yourself these 4 questions. What interest rate am I earning while my money is stored? And does the savings vehicle provide liquidity? Meaning, do you have access to your cash? And is my savings safe and secure? And if I spend my money, will it still grow? Now, I took those 4 examples on the past slide and I broke it down to a chart. Now, I got this information. I got this information from bankrate.com. So feel free to go ahead and check it out. Things could have changed since the beginning of the month, but I highly doubt it changed much at all. So let's break it down. If it's under the mattress, what interest rate are you earning? Nothing. Is it liquid? Yes, you can grab it and go do whatever you want with it. Is it safe and secure? No. And, the house could burn down. Somebody could steal it. And if I spend my money, will it still grow? No. Savings and checking account. What interest rate is it? 0.01, 0.5 is what I found. It's not earning 4%. We'll get to that later. Is it liquid? Yes, you can go ahead and pull the money out. Is it safe and secure? Yes, it's within a bank. And if I spend my money, will it still grow? No. The CDs, I found 0.9%. Is it liquid? No, it's locked in for, I don't know, a year, 5 years, whatever you decide to find. Is it safe and secure? Yes, it's with a bank. And if I spend my money, will it still grow? No. The 401k, well, that varies with the stock market. We all know how a lot of people lost their retirement plan that they had in there. Back in 2008 and stuff, and they might be still losing it now. And, so it goes up and down. You think you're going to get X when you go ahead and retire, but then it's going to come down, with the market. So it varies. Liquidity, no. You can touch it at 59.5 and not pay that penalty fee of another 10%, or you can touch it prior to that and pay that penalty fee. Either way, you're still paying taxes, and taxes are always going up in my book. I don't know what's going on out there, but you can go ahead and look. Is it safe and secure? No. I mean, it's always fluctuating, right? And if I spend my money, will it still grow? No. So if I was to share with you a savings vehicle that can answer yes to all these questions, would it interest you? Sure. So I have it, right? A savings vehicle that can answer yes to all those questions, and then you have an interest rate of 4%. And then ask yourself, is there anything else that this savings vehicle can do for me? And the answer is yes. So what is this savings vehicle? Well, it's an overfunded dividend-paying whole life insurance policy with a mutual insurance company. And these are well-structured policies. And we'll dive into that a little bit further. But they're most commonly known, this whole idea is most commonly known as infinite banking concept, cash flow banking. So feel free to go ahead and explore Google or whatever you want to do. And we're designing this policy to reduce your insurance cost and to have maximum cash value. And just a reminder, this is not an investment. It's a savings vehicle. That's why I had those 4 examples listed on here as a savings vehicle. So this is not to go ahead and say term and is better than whole and stuff. They all have their place. But I just want to share with you why we have to use a whole life insurance policy for this. Okay. So I'm going to break it down with you. And, I like to look at the W for whole as when are you going to pass away? Okay. You are going to pass away sometime, unfortunately, and we all have to be prepared for it. So it's just a matter of when, right? And so the whole life insurance policy is structured for your whole life, right? You can get them up to age 120. You're locked in for your life. So once you go ahead and get this policy, you do a medical background. You get the policy. You don't need medical background again. You're locked in, okay? You have cash value, meaning you could have access to the cash. And it's growing inside of this, okay? And you can borrow the cash value, your money. The term policy, well, time, term, take it how you want. And, it's for 10, 20, 30 years, okay? So you're paying for it and then it's going to fall off, right? So you go ahead and you have it for 10, 20 years. And, let's just say you were 20. You got it for 20 years and now you're 40, okay? And then, you're out of insurance. Well, now you need new insurance. So you're going to go ahead and apply again. You're going to do another background check. Well, times change, right? Maybe you have some kind of medical condition where you might not get insured again. I don't know. So that's a risk that you have to take if you're going to do term. Okay. Again, I'm not trying to argue which one is better. They all have their place, but I'm just sharing with you why we need to use a whole life. Term has no cash value. Okay. You're not growing any wealth in this, and your money is spent. So you're paying every year and that money is gone. Now, just know that insurance companies, they have this pretty good. And there was a study, I think probably 10 years ago, I think it was, that I could find where they paid 1.1% of term life insurance policies. And that's it. So, that just tells you how good they have it, finding the numbers of how much people are going to pass away in a certain given time in the area and with any health issues they might carry. So these are some reasons why we have to use a mutual insurance company. They've been around since the 1800s. They know what they're doing, okay? They're not new companies. They're managed by shareholders who are the policy holders. So if you go ahead and you get this and you become a policy holder, you are now a shareholder. You get to choose who's on the board. It's not listed on the stock exchange. It is not fluctuating with that stock market whatsoever. So you have peace of mind what's going on here. You have a guaranteed return 4% for the life of the policy. And there's also a non-guaranteed dividends, and these are all growing tax-free. The non-guaranteed, they've been paying out through many of the years they've been in business, and even through the Great Depression, even through the 2008 crisis we had. And they're still paying them all out. It is a private contract between you and the insurer, meaning in most states, the creditors can't get to this. So that's great. They can't see it. So how can I use my banking system for me? Okay. These are just some examples of what most people are using it for. Just know that you can use it for anything you want. All right. So for instance, I wanted to go ahead and buy real estate with my banking system. That's how I got mine structured. I had a rental property about 4 years ago where I was able to refinance, take cash out, and my plan was to go ahead and buy another property. I did not know where I wanted to buy one. I did not know when, but I just had that feeling of pulling the trigger and refinancing and have my cash sit somewhere in a savings account, earning next to nothing and not working for me, right? I don't know how, sometimes the universe just calls out to you. And, I ran into this whole strategy, and I ran into MC, who's on my team, and I got it created for me. I was able to refinance my property, start my banking system for me. So now I created an asset bringing money into me. Okay. Cause it's growing. And then I was able to take the money from there and go ahead and purchase another rental property, which is what I did. I also used it to pay off a debt I had at the time too. So it reduced my debt I had, and I was able to pay back to my banking system. So that's how I really wanted to use it. I did not want my money sitting in a bank account earning next to nothing, not working for me, right? And that just was a real bad. I just had that feeling in me of not. That's why I hesitated pulling the trigger to refinance until I came across this idea. So that's how I got started. So, and then savings for the children's college. I call it a 529 plan instead of 529 plan, because here you could do what you want with it. And, I won't dive too far into these, but, a 529 plan, you're limited to what you can use it for, and you can only access for college, for what they say they use it for. Whereas with this, say your children decide not to go to college, you can use it for whatever you want still. Okay. And create their own pension. So let me share with you a story. I had a client who was looking at this, for quite some time. It might take some time to, pull the trigger on this. I get it. And, so he has his own business and he had no, plans for retirement. He had no college plan for his children. So, we sat down, we got him a policy, the banking system. We got it all set up for him. He wanted to save for his children's college. That was the plan, right? He got the plan all started, and then after he started, and we showed him on the back end of what you could do with it as a retirement plan. You can withdraw from this when you're retiring 60s or 70s, whatever you decide to do. He could see what it was going to be. And now his focus now is on creating his own pension, so now he's thrilled and excited that he not only can either decide to pay for his children's college if he wanted to, but then also have it for a retirement plan on the back end. So that's how he came back to me and said that, he was really opened up his eyes when we went through the policy, and he started in the end and get it going. And now, he can shift over and look at it this way if decided not to pay for his children's college. So, you can use it for more than one thing. And then, you can start a business, expand a business, get out of debt, store your emergency fund, opportunity fund here. If you have 6 months of reserves or whatever, sit in a savings account, it's earning nothing. It's not working for you. This could be a good spot to just shift your money, let it grow. And you can see in the policy illustration what it would do for you. And you can also use this to lend to people, And so, again, use it for whatever you want. You have control over this. You become the bank, your own bank with your own banking system. So I just want to share with you a policy illustration. This is just an example. I don't know if this was a male or female. It doesn't matter right now. I just want to show you a few numbers, what's happening here, how we are doing a 30-70 split, because some people don't understand that. Okay. So I believe this person started at the age of 31 and their total premium is $10,000. So that means they're paying $10,000 a year. Okay. Now just understand that, that could have been most of their emergency fund money that they were saving every year. Now it's just funneling into this. All right. So now what's happening? What's a 30-70 split? Well, if they're paying $10,000 a year, the 30% is these two, which go towards your insurance. Okay. That's your 30%. And then your 70% is this $6,886. All right. So that's where we get our 30-70 split. You have to pay for some of the insurance cost, but yet you're also going to have money available to you. So the money that's available to you, this is a guaranteed assumptions. Let me get my pointer here. Where are you? All right, there we go. All right. So it's slow here. All right. So this is the guaranteed assumptions. So this $7,307 is your cash value. That's the amount of money you can withdraw. Okay. And if we were to set this up, you're able to withdraw this money within 30 days after you get your policy started. Okay. So you can touch this $7,307 no matter what you want to do with it. And then over here, you're earning these dividends. And each year you can see in this cash value, it's going up from 7,000 to 15,000, 23,000, 44, and so on. And, you know, and I don't want to spend all the time explaining the whole policy illustration to you. I just wanted to share this with you to see the 30-70 split of what you're getting from it. And then, you know, you have your death benefit of 646,000. Now, this isn't your human life value, but this is what we have structured for you, so you can create your own banking system and use it. And you can see that that death benefit is growing every year after year as you are putting money into this. And the money is growing inside the policy at 4%. And then you also have the non-guaranteed. This is your non-guaranteed here of your dividends that's being paid out. And your guarantees are locked in here. So I wanted to share that with you real quick. And then this is the good stuff. This is what I really like. So you have a policy loan. So this is where what's a policy loan? That's where you get access to your cash value and you can use it for what you want. Okay. So it's a no credit check. You can get your money in 30 days after you start your policy. Okay. So let's just say you got your policy and it's been 60 days. Well, how long does it take to get your money then? You know what I mean? It could be 3 to 7 days. Wire it. They can mail it to you. It's just after you start your policy, just wait 30 days and then you can have access to that money. So it's simple interest like a credit card. As you pay it down, you have the money available to you. Okay. It's not like a car loan or anything where it's amortized. You pay back on your own terms. Now, this is really important to understand. You pay back on your own terms. Now, I'll go through an example in a little bit, but you can pay back in the next month, the next 3 months, the next 6 months, the next year, the next 3 years. It's up to you. You know, it's really what you decide to do with it. They don't care. Okay. And we can get into that a little bit more too. The cash value is used as collateral. Well, what happens here? Okay. Let's just say you have $20,000 cash value and you borrow that $20,000. You have $500,000 available to, or I'm sorry, $500,000 in your death benefit. You pass away, they're going to take that $500,000 minus the $20,000 and then any interest that accrued throughout the years. That's it. The insurance company knows they're going to get their money back one way or another. That's why they don't mind giving out policy loans. And then you are borrowing from the insurance company account. Okay, what's happening here? Well, this is where it's really good too. Okay, you have your policy. Make sure I'm up on the screen here so you can see me. Sorry, I have to flip to tabs. But you have your policy here, okay? And I'm going to make it, oops, sorry, wrong one. I'm going to make it a little bit bigger for you. There we go. So you have your policy here. And then you have the insurance company's account here. Okay, so you have $20,000 available to you. That $20,000 is going to keep on growing. The guaranteed, non-guaranteed, tax-free. Okay, you're borrowing from the insurance company's account. You're paying interest to them. Okay, just like you are paying another bank or whatever. But your money's still growing for you. I mean, like that's just too cool. I don't know where else you're going to get that. And then we'll go back to my presentation here. Okay. So that's the insurance company account. So that's where you're going to borrow from. Now, a loan example. Okay. So let's go to a traditional bank. We want to get a car. What do you have to do? You have to do a credit check. You have to fill out all your information. They have to make sure you're approved before you even get the money. Okay. So you have $20,000. You're going to look at get $20,000. You get a loan. You have the car. They're going to give it to you. Then you have to start paying interest. Then you have to pay the car payment on that. Right? And you're going to pay it back to the bank. Well, when do you pay it back? Basically, most likely you're paying back the next month or two. Okay. And they're making interest and you're locked in for X amount of months or years. And, they own the car. Okay. They have title. Now, let's just say that you are going to go through your own bank. Okay. We're borrowing from your own bank. They can't repossess the car. You own it. You bought it cash. You borrowed the $20,000. You went to the dealer and you paid $20,000 for the car. It's yours. Okay. They're not going to come and take that car. They don't care. They're going to get their money eventually, if you pass away. So now here's the idea is what you want to do is you want to pay back what you borrowed. Okay. So if the bank is telling you to pay X, you want to pay X, and you also want to try to pay more so you can pay it off quicker. Okay. And then you have the money available to you again. But it's going to keep funneling your bank, and eventually it's going to come back to you in dividends, and you're going to earn more. Again, you're still earning dividends when you borrow from the insurance company. Okay. So it's growing tax-free, 4%, and it's also growing with the non-guaranteed dividends. And again, the death benefit covers the loan. So if you had $20,000 available to you in cash in a savings account, and you went and bought your car cash, yes, you own the car, but now your money's gone, not working for you. Whereas in this example, your money's still working for you, and you went ahead and bought a car anyways. Okay. So again, tax-free. You can earn interest tax-free for the life of the policy. Non-guaranteed dividends are earned tax-free, and consistently paying dividends for 100 plus years. Again, I said a lot of this already, but I just want to go through it again and share this all with you. So there's a death benefit is being paid out tax-free as well. And now the question you ask, will this work for me? The answer is yes. Okay. You do have to be disciplined. You have to know how to handle your money, and you want to see it grow. You want to be able to use it in your life. Okay. Make sure it's structured right, and being structured right, you have to have the right agent. So this is all I'm focusing on. I'm not focusing on anything else but structuring a banking system for the clients. So we'll take your goals in mind. We will collect some information from you before we even go ahead and sit down and do a policy to see if it's even a good fit first. And maybe you have to make some changes to get to it. But you want to make sure you find the right agent, and they have infinite banking. This is infinite banking concept, IBC practitioners out there. And that's because they went through a whole course and stuff to know how to structure this properly for their clients. So you want to make sure you have that. And that's what you're getting with me. Now, I am not an IBC practitioner, but MC, who is part of my team, is. So when I get my clients, I sit down and I go with him, and then we say yes or no, and then we go ahead and we do the policy, and we'll go through, move forward from there. So you're getting 15 years of experience with all this, and over 1,000 policies that have been created. So what's next? Okay, well, I'm going to give a few minutes here. If you want, if you have your phone available, you can go up and just put it on a camera, and you can put it. You can put it on camera. I'm going to make this bigger for you. There you go. Put it on camera, and you can take that QR code. What's that code going to do? Well, it's going to put my email in there. It's also going to put a website where you can go ahead and learn more if you like. And then also within my email, if you email me, you'll see that you can go ahead and schedule like a 15-minute call with me. That's down at the bottom. After I return an email back to you, and then you can schedule a 15-minute call. So that's what that QR code is going to do for you. And you get all this in 30 days or less. That's all it takes. It doesn't take long at all. 30 days if you have to go ahead and get somebody's got to come out and do blood work or whatever. A lot of people are going through the system without even getting that stuff done. So you might know within a week or so. So you get all this: control your wealth in any economy, guaranteed and non-guaranteed returns, liquidity, grows tax-free, and then you have the protection. Now, I want to share with you the website that is in my QR code there. I'm going to get this to pop up. So here's the other QR code. If you want to go ahead, you can scan this and follow it with me for a little bit, and then you'll have to watch me. But if you scan that code, it's going to take you to your own banking system, that link up there. I'm going to click on that link. Give me one moment, please, as this loads. There we go. And it's going to bring you over to some videos that you can watch. No cost to you. It's all for free. All right. So you're going to go here and you get access to these videos. Well, how do we do that? Well, you're going to type in your name. You type in your email, your phone number. Oops. Email. Okay. Click here for access. Now, I already have an account. So what's going to happen for you is you will get an email giving you your login name. It's also going to give you your password. Okay. Now give me a minute. And I'll log in here and I'll share with you these awesome videos. Okay. Now, everybody's got dots for their passwords, right? All right. So just everybody's passwords, dot. So anyways, okay. Your own banking system, right? Let's view the product. We're going to click over here and view. All right. Now this is a course. And we're going to just click on Start Course. There we go. Okay, we're moving along. All right, here. Start the course. Okay. So you got a welcome video. You have all these other videos that were on the other page there, and you can go in order. You can jump around if you like. It's best to go through them. You can go ahead and repeat them, watch them over and over again. There frequently asked questions is a great video because probably as you watch these other videos, you probably have questions. And instead of maybe you reaching out to me and us talking, and asking a question, they might already be answered on there. So that's a great video to watch and get your questions answered there. And then, when you're ready and you want to get started on this, you click here on this questionnaire link. All right. So we're going to create our own banking system. All right. So how did you hear from us, or who referred you? So this is where I just want to get you to the other pages. Just type in my name, Jon Emery, click next. And it's just going to ask you for basic information, your name, spouse name, hometown. And I'll just go to the next one. There's six of these boxes. Health insurance, life, any health issues, etc. And it just takes like 5 minutes or less. You don't need to have the exact numbers when it gets to the financials part. Oops. Okay, well, it took me off of there. I am sorry. Let me go back here. I have to share a different screen with you then. Share. And Chrome tab. All right, escape the rat race. Then I'll have to share another one with you, it looks like. Okay, so this is where you would wind up at. Okay, you have all these videos, and then you can jump around. These are where I was saying you can jump around if you like. Then you click on this questionnaire button. Now I'm going to have to go ahead and go back and change my screen again because it just keeps on wanting to open up new tabs for me. Okay. Share. All right, share screen. And I think it's this one. All right, good, you're with me. All right, sorry about that. So we're starting, create your own banking system. It takes about 5 minutes. Type in my name here for the question one of 6. And we will move on. And then this is where you have your different names, blah, blah, blah. And it just keeps going through. Again, 5 minutes or less. Now I'm going to stop sharing my screen. If you have any issues